This trade right here on pound US dollar made me $2,500 last week trading and it only took around a few hours to play out. And in today's video, I'm not only going to be breaking down this exact trade, but I'm also going to be walking you through the full strategy, which ultimately allows me to consistently capitalize on moves such as this one. And guys, because I have made a few of these trade breakdown videos in the past, to switch things up a little bit today, I'm not only going to be breaking down this trade which I took, but I'm also going to be explaining why it was the only trade I took on pound US dollar for the entire week and why I didn't take any trades throughout the rest of the week and why these ones were lower probability. Because one thing I firmly believe is that being a consistent trader is much more about knowing when not to trade than knowing when to trade. So without further ado, let's get into the trade breakdown and let me explain how I made $2,500 trading pound US dollar last week. Okay guys, so before we get into the trade breakdown, just some quick proof that I did actually take this trade. So first of all, here's the screenshot of the profit and the entry and everything like that on CTrader. And also here is the signal which I called inside VIP beforehand. We also called this on our daily live morning call as well. So as you guys can see, we set this trade right here. You can tell it's live price because the timer's on right there. And as you guys can see, this was the 5-minute chart. This was the trade. And if we go over to trading view, you can see that this was the exact same trade, as you guys can see. So now that the proof is out of the way, I know a lot of people fake this and only trade bar replay. So that's just some quick proof just to validate what I'm actually saying and why you should trust me. So starting off from a completely blank chart, right? What I was viewing basically going into the week was the fact that if we just have a look at daily time frame, all of my trades originate on daily time frame, and I always use daily time frame for my directional narrative and where price is likely heading. So what we can mark on here, and one thing I believe is really important is, and this is going to give you a lot more clarity, is just to mark on the previous structure and where price has reacted from previously. So in this particular case, you can see that the daily time frame was overall bullish and was presenting very clear bullish structure in the form of these higher highs and higher lows, right? When we have market structure like this, these are very optimal conditions to be looking for buys because you have that very clear market structure, which you know is likely to continue. Also, one of the other tips that I like to mention inside VIP to all the guys in there is basically just look to the left and ask yourself the question, based on where price has come into to the left, is it likely that we see a complete trend reversal? And typically when you see a complete trend reversal, price would have done one of two things. It would have either swept higher time frame liquidity, or it would have come into a higher time frame supply, which is significant enough to cause a complete reversal. In this particular case, neither of those two conditions were met, and you can kind of see price had just reacted from a random area to the left. So what I was kind of thinking based on that, just kind of using logic, was price is very unlikely to completely form a trend reversal here, and it's much more likely that this is just a pullback for price to continue over to the upside. So using that logic, I was then basically viewing this right here as a sweep of liquidity for higher prices. One of the things that you will very often see price do, particularly in the Forex markets, is you kind of have this higher low, right? So what the majority of people are looking for is they're trying to buy at around this previous level right here, because one of the things that most traders are taught at the beginning of trading when they first get into it is that higher lows are like an area of support where they should buy from, because obviously, right, because price reacted from it previously, it's likely to react from it again. But very often and very rarely that actually works. That's just kind of what the majority are taught as they go into trading, right? So what very often happens, and you see this all the time, is price would sweep that higher low before heading over to the upside. It also happened back here, right? Price swept the liquidity, then uses that as fuel to continue over to the upside. Lots of people would have been trapped here trying to sell, viewing it as a change of character, or they would have just been viewing it as, you know, trying to buy from this previous higher low. So with that being said, price has come down, swept the higher low, and this is where we want to be focusing in on price and looking for an entry. Obviously, what we want to do first, before price, you know, we don't want to try to predict that price is going to flip back bullish. We want to wait for it to clearly show us and demonstrate to us that it wants to flip bullish before looking for an entry. So if we just rewind price to where it was at the beginning of the day. So when I sort of came into the day, I do my analysis at around 7 a.m. UK time. So when I got onto the charts, price was around this point, right? And prior to this retracement that we were seeing going into the day, we had price show us clearly that it wanted to flip back bullish, right? So remember I said, I don't want to predict that price is going to reverse from here. I want to wait for it to do that and then show me, basically show me some bullish intent from that. And that way, the kind of bullish bias has been confirmed. So for me, what this actually looks like is price has flipped back bullish because it's created a higher high. Whereas before, coming into this level, it was creating lower lows and lower highs. Once it created that higher high, we had a further verification of this bullish bias when price came into the demand, held the demand, and then came back up, breaking structure once again. So now we've had very clear indication that price wants to shift back over to the upside after having swept the higher time frame liquidity. And this bit is very important. If price had shifted bullish before sweeping the higher time frame liquidity, I wouldn't have been considering the buys. So if that higher time frame liquidity is swept and then price clearly indicates that it has shifted bullish, that is when I'm looking to buy. So as I said, coming into the day, price was around here. And what I'm essentially asking myself coming into the day is, because price is bullish, where could it potentially pull back into for us to capitalize on another buying opportunity, right? And in this particular case, what I was seeing, you obviously have this hourly demand, right? But the reason why I wouldn't use this one is just because there's no liquidity above it. And that's basically one of the criteria I have for a valid point of interest, which I teach, is that there needs to be some sort of liquidity above your point of interest that's being taken out before looking to enter. Because if price has not created liquidity above your POI point of interest, it's very likely that price uses your point of interest as the liquidity, right? So essentially what I was looking for, and what I noticed once price did this, was we had this area of demand, right? But there's no liquidity above it. So what I was looking for was the low of this demand to get swept. Why was I looking for that? Because basically what I was anticipating was that this is a very clear level of demand where previous volume came in. So we know that there is a high likelihood that once this level is taken out, price gives us a reaction to the upside, because this is where people are willing to buy from previously. There's a lot of orders resting below this level, right? So once price swept that level, again, I'm not trying to predict that price is going to hold this level. I'm waiting for it to show me if it wants to make that move or not, right? And the way I look for this is by dropping to the M5 time frame. By the way, I always use the M5 time frame. I never use any other time frames for the entries, and this just helps to make the trading, my trading, as consistent and repeatable as possible. There's no confusion when I'm looking for an entry. I know basically everything I'm going to do on every single trade because it's always the same. So with that being said, once price comes into our point of interest, in this case, it was a sweep of this liquidity. All I'm simply waiting for is, if we mark this on, for price to go from printing lower lows and lower highs to creating a higher high. And this is called a change of character. So once price breaks above the most recent lower high, this is the change of character. And that is essentially all I'm waiting for in order to enter the trade. So you can see that once price did sweep that low that we were looking for, it created a change of character just here. If we just mark that on, I'll mark it on with a C just because it's a little bit easier to mark on the chart. So you can see that price was printing lower lows and lower highs. At this point here, notice how it kind of creates this false breaker structure, instantly rallies over to the upside. Also notice how much momentum came in. And yeah, just kind of think about this as, once the liquidity is swept, that's when the change of character likely happens. And for me as well, before entering the trade, what I need to see is an area of imbalanced demand. And in this case, we had this whole area. I was including from the wick to the wick as my whole area of demand. Extra confluence, this wasn't necessary, but it does increase the probability of the trade playing out. We had some inducement above the area of demand. So at this point, I just set my limit on the demand, had stops a little bit below, I believe it was around 12 pips. And then as always, I mechanically target a 1 to 3 risk to reward. And again, this is a game changer. This is also something I highly recommend you try out if you haven't already. It really just helps to remove any of the uncertainty and discretion in terms of where you're targeting. Because if you don't have a mechanical TP rule, you can oftentimes get very confused. You could target Asia high, you could target this high, you could target some imbalance to the left. Or there's a million other different targets you could have, right? Whereas if you just have a mechanical TP rule, It just takes all of the headache out of that and reduces decision fatigue. It also means that you're less likely to make mistakes such as closing the trade early, because you know exactly where you should be targeting, right? So this was the trade. As you can see, as price develops a bit more, it did create some more liquidity above this area, but I was still confident that this was a valid trade, so I kept the limit on. Once price came into this area, it did kind of mess around for a little bit. Initially went around 1%, pulls back to entry, and then just kind of consolidates for a bit. But one of the most important things here is trade management. I personally just let my trades run to stop loss and take profit. Why do I do that? Because over 5 years worth of live tested data, and also all of the numerous, back testing sessions I've done, have shown that the optimal approach, and the approach which produces the most profit, is just to hold to stop loss or take profit, rather than making break even or taking partials. So that's kind of the logic behind that. It's not just randomly selected. It is based on all of the data I've collected, and it's not just a random method that I use. So stop loss or take profit, that's the kind of philosophy behind all of my trades, and I'm always using the mechanical 1 to 3. So in this case, I just let the trade play out, and as you guys can see, did come very close to stopping us out at one point, but once I kind of saw a wick out of this liquidity plus a rally, that's kind of what made me confident in the position. And then as you can see, price rallied over to the upside and hit take profit for 3% on that trade. It was a little bit less on my account due to some commissions, and I think it tagged me in at quite a bad price as well. That's kind of typical of when you're using these prop firms, but can't really complain. Made 2.6k on that trade, so around 2.6 R, because I was risking 1,000 on the trade, and that's all there was to it, really. Now, throughout the rest of the week, and actually before we go through the rest of the week, I said I would break down why I didn't take any other trades. So if we rewind to Monday, the first kind of idea I was looking at going into the week was essentially for price to come up and target this high up here. And if we go back to the group, you can see that we did have a buy limit on Monday, this one, which I ended up canceling. And the reason for that is because price very simply never pulled back to us. So going into Monday, how I was viewing price was that we obviously had price hold demand after it flipped bullish after sweeping the higher time frame liquidity. It then started to make its way up towards this big wick. And again, asking myself, is it likely to reverse from here? The answer is obviously no, right? It's just within this one big wick. It hasn't swept the liquidity. It hasn't come into an area of supply. So based on that logic, I was seeing this as just a retracement for price to likely make its way higher and eventually take out this high. Now, on Monday, what I basically saw after market open was that price had come down, swept an area of liquidity right here, and was reacting from this sort of hourly demand of market on right here. This area of demand was already mitigated into, but one of the things I will do is if price does retap into it and take out the first rejection of that demand, I will still use it as a valid POI. So after price tapped into this level, we just fast forward to London session, price comes down one more time, takes out the Asian low and also the first tap of this demand, presents a change of character right here. So that was my entry confirmation on the M5 time frame. As you guys can see, that was the current lower high. So once I saw this, I was waiting for a retracement into the demand. I had my limit set on this area. And then, as you guys can see, the reason I didn't end up taking this trade was because price never pulled back into that level, and it never presented another entry for me as per my criteria. So that was Monday. That's why we didn't take any trades on Monday. And yeah, Tuesday was when we actually took the trade, which I just went through. So if we fast forward to Wednesday, Wednesday's price action was also quite interesting because price was very kind of clear and intent on where it wanted to head. That was very obvious, but we just didn't really get an entry. So as you guys can see, on Wednesday, the following day after we took this position, price had swept the liquidity, broken into new highs. It was still presenting this overall bullish structure. But one of the things that made me not trade this day was kind of just how price was moving. So let me just explain. If we fast forward price, this is still the Asian session. London session opens. So around this point right here, when London opened, I saw that price had broken structure again, just here. and created a new area of demand. So I had this POI marked as an area of interest. This is also one of the areas I would consider higher probability because price swept liquidity to the left. And whenever you see demand or supply zones take out previous liquidity to the left, I have noticed, and this is again backed by data, that they are more likely to hold. So in this case, once price came into this area, I was waiting for a change of character on the M5 time frame. As always, that's the same entry I use on every single trade. But in this particular case, you can see price just rallied over to the upside and created a new breaker structure. So there wasn't an entry there. And that's really important. It's knowing, like I said at the beginning of the video, it's very important to know when not to trade. Also, it could even be more important than knowing when to trade, right? And the reason I didn't trade here was because price very simply didn't present my entry confirmation. And obviously, sticking to my strategy rules, I'm not going to enter if price doesn't present an entry in that one area. So following on throughout the day, price then broke structure again. We had a new area of demand right here, but in the same sort of fashion as before, price, I think it came down. Yeah, it eventually did come down into it on, I think it was Friday. Price comes down during the New York session, sweeps all of the liquidity just above it and taps into the demand. But if we play on price, it never really presented an entry confirmation. Here, we did see a change of character, you could say, just here, if we mark that on. So this was the current 5-minute lower high. As price tapped into the point of interest, this is what I was waiting for to break in order to get my entry. But the reason why this entry wasn't valid and the reason why I knew it was unlikely to play out was because price just created all of this efficient range. And what I mean by that is there's no imbalance within this range. One of the criteria I need to see to enter a trade is for price to create some sort of imbalance. And in this particular case, there wasn't any in this range, right? So this was not a valid trade, hence I didn't take it. And what you can see, and what happens 9 times out of 10 when you don't have an area of imbalanced demand to enter from, is price will just continue down and not respect your analysis, and your analysis was wrong. And that's exactly what happened in this particular case. In hindsight, what we can kind of see is that price had reversed after sweeping this sort of higher time frame liquidity level. This whole region here as well was, if we go back to the daily time frame and mark that on, this kind of whole region was an area of daily supply that price was respecting as well, and price eventually did come lower, right? So guys, that was how I made $2,500 trading pound US dollar last week. Now, in this video, I did show you how I called this trade in the signals group, as well as also in our daily live morning call as well. So if you guys would like to partake in these live morning calls, I'll leave a link in the description below. If you did manage to enjoy the video, I've also got another one here, which you can watch next, where I break down how I made $3,000 on Euro USD in the same week as well. I hope you guys all enjoyed this video, and I will see you in the next one.